The cryptocurrency markets have been looking a bit more optimistic over the last few days, but we are not out of the woods yet. And you guys know where the bears live. The bears live in the woods. Yes, this is the reality, guys. So in this video, I want to discuss whether or not the bear market is here. I don't think that it is. I think what we're seeing right now is actually much more akin to what we saw back in 2013, which would actually explain a lot in terms of how this particular market is acting right now, with some indicators showing the bear market's here, but most indicators actually saying that the bear market isn't here. So I'll dive into all the details around this in this video. Also, Michael Saylor has come out to single-handedly save the markets once again, organizing some Bitcoin meetup between Elon Musk and miners and other stuff. So we'll dive into that story here as well in today's video. My name's Lark. Every day I make videos talking about cryptocurrency investing. So if that is a topic that you would like to learn some more about, make sure that you subscribe to the channel. Subscribe to the channel. Takes just a quick second. Click on that subscribe button. Boom, you're done. Just like that. And if also you could find just one super quick moment, tap on the thumbs up button. That'd be much appreciated. And of course, click on the notification bell to know when I put out a new video. So let's go ahead and turn over to the charts to get started off with. So the price of Bitcoin at the time of recording this video, over $38,000, which is nice. However, we are still below the 200-day moving average. That's the big thing I'm watching right now. We've been talking about that for like a week at this point, but that is the line. That is the bear and bull line for me. When we get back over that blue line, well, the bulls are back in control of the market. Until that happens, the bears are in control. We are still in that situation where there is a lot of fear in the market. People are not believing that this is a recovery. People are still afraid. You still have people out there saying Bitcoin's going to go down to $20,000. So there is still a lot of fear in the market. It is quite palpable. Now, what have we seen here with the price action? So we've actually seen after this massive dip, obviously we came back up, failed to hold over the 200-day moving average, came back down. We actually did set a new higher low here. So we're starting to build up a bit of a situation here where hopefully that does continue. I mean, we'll see. We only have 2 points of reference so far, so this isn't a very strong build up, but it could be enough to signal that a reversal is in play. Now, what we did see today as well was this right here, where the price of Bitcoin did make an attempt to crack back over the 200-day moving average. That test attempt didn't work out in our favor. Now, the new daily candle, we still have a lot of time for that to close, so we could see this pumping by the end of the day off of, some bullish tweets from gosh knows who, and we can see the price coming back up. But until I see a couple of daily candles with some decent volume backing them up, closing above this blue line, I am considering that we are in a bearish trend. Another bit of nice news, though, we did also get in a higher low on the RSI, so that is a nice movement there, showing that we could, again, be bottoming out here for the market and that we could be getting ready to actually move a bit higher to test that situation out. But let's not count our chickens before they hatch. As I mentioned, we are not out of the woods yet. We could get rejected here quite a few times, easily come back down. Now, I would hope that we wouldn't fall below this trend line that is starting to form up here. So we could, in theory, see Bitcoin coming back down to the low 30s again in this scenario. So until we crack over that blue line, anything is possible. The bears are in the driver's seat of the market right now. Now, by the way, if you do want to be trading this market, super volatile market, lots of opportunities to be trading this market, I recommend to do that over on Femex. It is the best futures trading exchange. Now, this is only for experienced traders, so if you don't know how to trade, you have no business trading over on Femex. Now, if you do want to try out the exchange, there's a lot of great bonuses you can get. Use the link down below to start your account, and you can get up to $150 in bonuses for making your first deposits, doing your first trades. You also get 10% off your fees by using that link. And for a very limited time, only for around 17 more hours from the time we're recording this video, there is an insane deposit bonus going on. So you can actually get up to $2,000 in trading bonuses. All you have to do is use that first link in the description to sign up and then deposit some Bitcoin. You'll get a $20 bonus for depositing 0.01 Bitcoin, all the way up to a $2,000 bonus for depositing 2 Bitcoin. So if you are a trader, go ahead and check that out. Now let's go ahead and dive into this topic of whether or not we are in the bear market now. And I do not believe that is so. I've mentioned that many times here on the channel. If I did believe we were going into a massive bull market, then I would wait and I would not have bought a bunch of Bitcoin at $31,000. But I don't believe that we are going into a bear market. I believe this is a bearish trend within a wider bull market. Now that might not make sense to your brain immediately, but this is exactly what happens. Back in 2019, for example, we had a bullish trend within a bear market. So that was our bear market rally. So what we're seeing right now is a bull market correction, much like we saw back in 2013. Now, why do we always talk about historical models? Because the reality is that history never repeats itself. That's one thing you really need to get through, is that no two bull markets are the same. History never repeats. Markets can rhyme, but they never repeat. And the reason that we like to talk about historical models is because it lets you know what's actually possible with markets. It gives you a frame of reference to say, hey, what's going on right now is pretty crazy. Is there any precedent for that, or are we in totally uncharted new territory here? Well, what we're actually looking at right now is actually potentially a situation where we have been here before, and it may not actually be that crazy. As Raoul Pal as well pointed out, 2013 is calling and wants its mid-cycle bear market back. So remember, markets move in cycles. Sometimes they have more bearish trends, sometimes they have more bullish trends. You can have a bull market with bear trends within it. You can have a bear market with bullish trends within it. It all depends on your time frames and where you're looking at. And so what I think we're seeing right now is a situation very similar to 2013, where we did see that happening. And again, it's not to say the 2013 market's happening all over again. No, this is a new market. This is a new time. But these cycles do happen. Now, when we talk about a bear cycle within a wider bull market, or even if you want to talk and say, hey, there's a bear market here and it's going to last for a few months, for example, and then that bear market's just part of a wider bull market, however you want to call it. I think what a lot of people are freaking out about is that they think a bear market is here where we're going to see prices just continue to go down for the next 2 to 3 years, where everything's going to crash by 80 to 90%. You know, Bitcoin's going to go down by 85%. Ethereum is going to go down by 93%. Every single altcoin that you hold is going to go down by 99%. That happened. That happened in 2018. It was a good time. Everybody had a lot of fun. But I don't think that's what we're facing right now. I think what I'm seeing in the charts is that we are facing a situation where there is a bearish trend. It's obvious. I mean, we're closing the daily candle below the 200-day moving average. That is not a bullish thing. You can be bullish on the market and recognize that the technicals that are showing in the market right now are not bullish indicators, right? So closing under the 200-day moving average is definitely evidence of that. One interesting thing too here is that when I was talking a few weeks ago, I made a few videos kind of looking at different charts and things like that of whether or not we are in a bear market cycle. And one thing I was saying is that we've got a couple of indicators that are showing that a bear cycle is taking off. And obviously we had a 50% plus correction. So yeah, a bearish trend has definitely taken charge. And maybe I didn't pay enough attention to the few indicators that were showing a bearish trend. But the reason that I don't think that this is a bear market, simply a bear cycle within a wider bull market, is because we only had a few indicators saying that we are entering into a bearish trend. Now we had the MACD on the weekly, we had the Pi cycle top indicator. Most indicators, though, are showing that we are not in a bear market cycle. In fact, the majority of indicators are showing the opposite, that we are still in a bull market and that we have not yet had the top phase for the bull market. But what's interesting is that we did see a few of these indicators showing these bearish signals. So we had this sort of mismatch where we had some indicators which are traditionally pretty gosh darn reliable and have obviously proved to be reliable enough in saying that, yeah, we are having a market turnover, and that's exactly what happened. We have all these other indicators which are saying that, no, that's not what's happening. So that leads me again to suspect that, much like in 2013, we are simply seeing a massive market correction, which is simply a part of a wider bull market trend. And you can see, for example, we did actually have the bearish crossover here for the pi cycle indicator in 2013. So that's something that maybe not a lot of people realize. We did actually have that bearish crossover happening, and then of course the price went on to get to a new all-time high. Of course, back in the day, if you only could buy a Bitcoin for $1,134 nowadays, which also proves the power of hodling. Even when you buy the tops, things end up being kind of okay for Bitcoin. Imagine if you were that guy in December 2013, you bought the top. You bought Bitcoin for $1,134 a piece. Those are fantasy prices nowadays. Obviously, you had to hold through some pretty dark and grim times. That's why we dollar cost average in, adding a little bit here, a little bit there, and moving forward. So that's my kind of thoughts right now on this bear market situation, that this is not a bear market as a lot of people would envisage it. It's simply a bearish cycle within a wider market that is still, for the majority of indicators, showing that it is in a bull trend. Now let's talk about some news. We're going to start off with a fun story. Legendary hedge fund manager Ray Dalio has finally bought some Bitcoin, or admitted to having some Bitcoin anyway. I don't know when exactly he bought it, but that's very exciting. Yes, welcome to the party, Ray. Now the only problem here is that Ray Dalio's hedge fund, Bridgewater, has not been included in the good times of buying Bitcoin here. Maybe they bought the dip, who knows? I guess we'll find out eventually. But at this time, only Ray has some Bitcoin. Bridgewater has not entered into a position on Bitcoin yet, but hey, still plenty of time for them to do that. Now, the big story of today is that Michael Saylor, once again out there single-handedly saving the cryptocurrency market. So he said yesterday, I was pleased to host a meeting between Elon Musk and the leading Bitcoin miners in North America. The miners have agreed to form the Bitcoin Mining Council to promote energy usage, transparency, and accelerate sustainability initiatives worldwide. That is pretty gosh darn interesting. So essentially, what we're seeing is, one, Michael Saylor leading the charge again, but interestingly, we've been really seeing this big narrative happening around clean Bitcoin, virgin Bitcoin, ethically sourced Bitcoin. All of those conversations have been being had. Now, a lot of this is geopolitics. We've seen China on the receiving end of the majority of that because they do control the majority of the hash power. Now, there's a lot of reasons why the USA has not been a bigger player in the cryptocurrency mining game, but that has been changing. We have seen some mega mines going in, particularly in Texas. I think there's 3 or 4 mega mines located in Texas now. We also have some big mines in New York and in the central USA. Also, Quebec has got quite a few hydroelectric powered Bitcoin mines as well. So this is a pretty interesting conversation. You see, I feel like Elon Musk, our crypto agent of chaos, that he was really throwing out the baby with the bathwater when they said, well, look, Tesla's simply going to stop accepting Bitcoin because of the environmental concerns, because 1/4 of the transactions on Bitcoin are indeed powered by dirty energy, right? They're powered by coal-powered fire plants and all that kind of stuff. 75% of the Bitcoin network is powered by renewables, but that didn't really come up in the conversation at the time. But there is a big push happening for more renewables and better sustainability initiatives for the Bitcoin network. Now, there is, of course, the conversation about the reality that increasingly we are seeing these different players. I mean, come on, a Bitcoin mining council. Seriously, guys? Seriously, what is it? What's going on with this? This is ridiculous. But this is the reality of the network right now, is that Bitcoin is becoming increasingly centralized via the mining guilds. They have a complete stranglehold on the network in terms of the production of blocks. Now, that is an economic reality because in order to be able to be a Bitcoin miner and have it be profitable, you have to have a lot of money or have access to dirt cheap power. And this is why we see so many miners based out of China, because there's cheap power there and they can get the machines locally. So it's a good initiative. I think that we should be pushing for a greener grid overall, and that Bitcoin can be a leader. It already is a leader in renewables, which is the ironic thing. Everyone's out here bashing Bitcoin, and actually it's 75% run by renewables already. Let's conquer that last 25%, obviously, and I think this initiative may go some way towards doing that. But again, you have to keep in mind the geopolitics here of the entire situation, and of course the business opportunity for people like Elon Musk to be able to come in and say, hey, let me help you green Bitcoin. By the way, buy my products. So that's pretty interesting. Now, also with the recent China FUD, there has been some rumors going around that Chinese miners have basically been panic selling their Bitcoin, dumping it on the market like crazy as they, try to reposition themselves and escape China and all that stuff. That's not the reality of what's happening, though. So rumors versus on-chain data, don't trust, verify, right? Well, that's exactly what we can see with on-chain data, literally saying what is happening with the Bitcoin miners. So we can see here that Bitcoin miners did indeed increase the amount of Bitcoin that they're sending off to exchanges. However, it's only increased from around 100 Bitcoin a day at the start of May up to where we are now, around 300 Bitcoin a day. Got to keep in mind, we're mining 900 Bitcoin a day right now. So this whole story or rumor that the Chinese miners are all panic selling and it's all gonna go, bad, is just not held up by reality, because we see the on-chain data showing that yes, miners have ramped up selling a little bit, but it's not the kind of ramping up of selling that actually makes a big dent. It doesn't fit with the rumors of Chinese miners panic selling their Bitcoin. You can also see this here. This is the miner net position change. So that was the big sell-off early at the year, then reduced selling massively. And we've basically been seeing Bitcoin miners accumulating Bitcoin since the start of April. And we did have a slight decline recently with the price, but for the most part, Bitcoin miners are still accumulating Bitcoin every single day. They are in a net positive situation with their total supplies of Bitcoin right now. So that means that Bitcoin miners are waiting for higher prices. There was some selling. They do have to cover costs. They're a cash business, but you can see that definitively Bitcoin miners are not dumping their supply here. They're mining, they're holding, they're waiting for higher prices. The behavior of Bitcoin miners tends to be a really interesting and reliable indicator of the strength of the market and where the market may be heading. Anyway, those are just my 2 Satoshis for today. Your question: what do you think about Michael Saylor and Elon Musk teaming up with North American Bitcoin miners to form the Bitcoin Mining Council? Good idea? Bad idea? Don't care? Let me know down below in the comment section. Thanks so much for watching today's video, and peace out till next time.